Welcome to Ideas of India, where we examine the academic ideas that can propel India forward. My name is Shruti Rajagopalan and I'm a Senior Research Fellow at the Mercatus Center at George Mason University. Today my guest is Sajith Pai, who is a partner at Blume Ventures and he's a long-time media executive turned VC. At Blume, Sajith supports investments in media, edtech, e-commerce, and now slowly in fintech and deep tech, while simultaneously helping Blume build a research and knowledge platform. We spoke about the 2024 Indus Valley Annual Report written by Sajith and his co-authors Anurag Pagaria and Nachimai Savitri, both at Blume Ventures. We talked about the many countries that make up the country of India, as is bifurcated between India 1, 2, and 3, gross fixed capital formation, fintechs, the consumption-led growth that India is experiencing, the space industry startups, and much more. For a full transcript of this conversation, including helpful links of all the references mentioned, click the link in the show notes or visit mercatus.org/podcasts. Sajith, so good to have you here. Thank you for joining us. I mean, we have very few people who come on a second time, and I'm very happy that now we have had enough episodes in the past that, that number is growing and we have some frequent repeat guests. So, Sajith Pai, again, welcome to the show. I want to start with the 2024 Indus Valley Annual Report. I feel like this is when I really speak with you. And this report is co-authored this year with Anurag Pagaria and Nachimai Savitri. Am I saying her name correctly?
Yeah, Savitri. Yeah.
Savitri. Okay, perfect. Yeah. One major difference between when we spoke last year about last year's report and this year is basically that the size of India 2, as you characterize it, has changed, right? Yeah. So just to get our listeners caught up, you sort of bifurcate India into India 1, India 2, India 3. Each of these segments has a further bifurcation. India 1 is still about the same size, about 120 million people. You call it a Mexico within India because it's about that, GDP per capita level and that kind of spending. But India 2, which last year you had characterized at about 100 million people, has now grown to 300 million people. So, sort of the description has changed from a Philippines within India to an Indonesia within India, though, of course, this Indonesia is at a per capita level of about Nigeria, but, that's sort of where we're at. And India 3 is still very large, 1 billion people, but unfortunately still at sub-Saharan levels. So this genuinely excited me and surprised me. So when I first started reading, I was like, wow, has India's sort of, middle class grown? And what I noticed was that a lot of this is not economic growth or income growth driven, but a lot of it is about consumption driven and especially sort of the changing patterns of consumption, right? So if I had to summarize this year's report, it is that there's some room for maneuvering amongst the different segments, India 1, 2, 3, especially when it comes to changing attitudes, especially when it comes to marketing, consumption, using digital spending and so on. But without strong economic growth, we're going to hit like a concrete ceiling very quickly. Is that a good way to think about this report? Because it's 130 plus pages. So I wanted to give the TLDR before we really get into it.
You got it right, Shruti. But before that, delighted to be here. It's always a pleasure to be here with you. So you caught on to something which not too many have caught on, that we did change the India 2 sizing. And the fundamental reason for that, Shruti, is my audience is fundamentally the startup founder in a way, right? That's really the core founder and kind of reader persona I'm aiming at. And one of the ways in which I want the report to be useful for them is for them to be able to use it for market sizing. And when I look at the consumption data, like you rightly said, when I look at the spends, for instance, when I look at the subscription patterns and YouTube data, as well as the data on apps like ShareChat, etc., I felt I couldn't defend the previous number of 100 million. Okay, even though I had a very neat Philippines equivalent and now I don't have such an elegant construct, I felt I had to increase the base because the base of consumers, albeit their per capita income is not changed. If anything, I have to drop it a little bit because, you have to expand it. But they are relevant consumers now, albeit not paying users to the degree, but they are beginning to spend. Dream11, for instance, is one area where they spend. They're beginning to spend on apps such as ShareChat. We're beginning to see some spends from India too. So their consumption can be unlocked a bit. But fundamentally, like I think you put it very well, the TLDR is that India One is becoming a powerful engine for growth. Those 30 million households, 130 million people, 9-10% of India is the economic engine that really drives the Indian economy forward. And the second order effects of that are beginning to be seen now in how they're propelling the financial markets forward. But finally, there is a limit we're hitting that we can only grow so much as India One allows us to. And unless you keep moving India 2, at least India 2.1, the upper kind of echelons of India 2 into India 1, we're not going to get like the kind of growth that China saw, far from it. So I think you've summarized it quite well. I think the TLDR is exactly as you put it.
So, I don't think you should apologize for the change in categorization because, if I remember our previous conversation correctly, you almost predicted this, right? Because you were talking about sachetization. You were talking about how startups are now slowly changing not just their like overall attitudes and values, but also the way they understand the Indian market to know that you can't just build whatever is being built in Europe and United States for India, right? You can't just build DoorDash for India. Now we're building for Indians, and a very large part of building for Indians is to understand what market actually pays, how much is their paying capacity, that they end up paying a lot in tiny sums of money as opposed to, one large lump sum. And there is a very large aspirational class that is sort of passively viewing or consuming the products of the digital marketplace, that's watching what's happening, that actually wants to enter this area. And when I read it, I felt like you had called it absolutely right in last year's report. And now you're seeing that in the expansion of the India 2 category.
When you spoke last year, there were a few trends that I spoke about sachetization. That's really the startup world saying we've got to adapt our revenue/economic model to fit what India 2 can pay. But there have been very powerful underlying infrastructural developments, not the least UPI, and how UPI has made it easy for people to pay 3 rupees, 4 rupees. And I think there is behavioral economics at work here. When you're paying digitally, you don't feel like you're paying as opposed to taking it out of your wallet and paying for it. So the India 2 customer, not just the India 2, sorry, every customer is used to now paying X rupees, okay? And especially the India 2 customer is now used to paying cash for microtransactions, as they call it. One of the trends we're seeing it is that if, for example, ShareChat thought they could monetize India 2 via advertising and they failed, okay? Because fundamentally those eyeballs aren't as lucrative as our eyeballs, right? But they're willing to pay. They're willing to pay 2 rupees. And the big finding for me was when Harsh Jain of Dream11 said that, hey, we can't get India 2 to pay 300 rupees a month. We can get them to pay 10 rupees every day for 30 days, right? And apps which are able to kind of unlock this behavior pattern, this spending pattern, will become the new winners. Really, I think it's these two trends. From the supply side, you have all of these technology and the behavioral manifestations of that. On the demand side, founders are saying, hey, we got all this technology. Hey, we know how it works. We've seen some of the pioneers in the industry show how to make it work. Let's kind of do that. And so I would say this is really, coming of age is not the right way to put it, but sort of, I would say all of the demand side and supply side coming to the fore and saying, hey, these are the the patterns of unlock and let's kind of go out and exploit them.
Yeah. One of the things that you highlight in the report is, a little bit alarming, but at the same time, it's very good news for the Indus Valley as you have it, which is that India's economy is so private consumption driven or private consumption heavy. This is relative to most of the other large economies, especially compared to China. And private consumption is really the engine that's powering everything. It's powering, of course, what's going on with the startups and the types of products that get launched, but it's also powering government behavior. Because, the government of India relies heavily on consumption taxes because it is very difficult to escape that tax, relatively speaking, which ends up making our tax base, more of the poor people. It's a very regressive way to raise taxes. Direct taxes, corporate and income tax have just sort of hovered around somewhere between the 2.5 to 3.5% of GDP mark. The tax to GDP ratio is low, but it's really being bolstered by this consumption. So I want you to unpack this a little bit from the startup, founders and also the venture point of view. How do you think of this trend of, the engine for the economy being this kind of private consumption and its growth?
I must say that as opposed to private consumption, being 60%, and it's not so much private consumption that's driving it as much as the lack of fixed capital formation,
yes.
right?
Yes.
So it's 60% is because it's 29% here, right?
Yeah.
And if that was a little higher, it would be like in the early 50s, which probably is a more realistic one. India has underperformed on fixed capital formation. Like I've seen data the last 24 years.
Yeah.
And it's never been about 33%, which it hit in 2010, I think.
And since 11, it's been in secular decline. I think it just started an uptick in 2021-22 fiscal year.
Correct. You're right. Some of it is path dependence. Historically, we've had low fixed capital formation because it's just been hard to get private sector to kind of invest. We've had a crippled corporate debt market. Again, is it the chicken or the egg? Is the corporate debt market small because private sector does not invest, or is the other way around? It's been expensive. Capital has been expensive. Lack of land reforms haven't helped. It's hard to get land to kind of buy on large scale. So multitude of factors leading to it. And I would say that the trend on taxation isn't helping much. For a long time, it was 14% a few years back. Now it's 17%, which is the tax to GDP ratio. So, and of which 6% is direct taxation and 11% is indirect taxation. And you would expect it to be the other way around.
Exactly.
In a country like India. But I think dangerous territory for me to go into. But I think there's a sort of a Faustian bargain. Like for the US, for instance, it was kind of no taxation without representation. In India, it's almost no representation for no taxation, right?
Yeah. I love that phrasing of it, yeah.
Yeah. So I've heard this consistently come up on your podcast. There was one with Rohini Nilekani where she spoke about the inimical effects of not having local taxes. You alluded to it in the podcast with Karthik Muralidharan. And what we have really done in India is to create like a national overarching tax, and where at the ground level, there is virtually no taxation, no property tax, hence no representation. If I'm not charged property tax, how do I go out and demand services, right? As a result, there's a complete kind of decoupling of the elite from any of the public market things. We all have our own private everything, right?
Enclaves,
yeah. So I would say for the startup community, it's really not something, it's really the second order effects. We benefit from that. One point is that it's very hard for the startup community to do anything at the GFCF level. It's hard for them to do it. Finally, it is up to the large industry, the large private sector investors to kind of put money in, the infrastructure players, etc. So I think we are happy beneficiaries of consumption and consumption's growth. But Shruti, I think predominantly, the challenge has been that consumption is really the top end consumption. It's not really gone beyond. We're seeing some signs of economic models which take advantage of, say, India toward wider consumption, but it's fundamentally really India one consumption that's driving. And sort of, I think the challenge that I see, and I think we can cover it at some point, is that the capital that's going in doesn't always take into account that there is a very small base of power spenders who are driving this forward. And that is sort of what I think the startup world has to keep in mind that this is really like the famous quote goes, never have so much been owed to so few, and all of that. Yeah.
Yeah. So, I want to get into the gross fixed capital formation part. Now, in your report, you actually start with it, which was such a pleasant surprise to me because I feel like no one pays attention to this one very important data point more generally. But especially the fact that, the decline started in 2011, 2012. And I think most economists have now started agreeing that the decline at least started because of the Vodafone retroactive taxation, all the corruption scams, sort of the corporate India part and the, foreign investors suddenly put their brakes because of so much regime uncertainty. And after that, you point out some of the reasons, which is, the NPA crisis, the twin balance sheet problem, because of which private borrowing just kind of shrank. And the more private borrowing, shrinks, the more government starts entering that space, which means it's further crowding out the private sector. These are just, very standard problems that we've been seeing in India for more than a decade. Now, my question is, we saw a huge influx of capital in 2020 to 2022 from foreign investors, right? That's when the VC market was ridiculously hot. We talked about it last time. It was actually unnaturally hot. All that has now calmed down. There's been a big correction. But why are foreign investors so nervous about putting any money in startups that involve manufacturing, deep tech, space tech, anything that would involve capital formation? Even like something more than capital formation of building a new office for a startup. Like we are just not entering that space, right? Same with EdTech is very much on the online front. It is not online coupled with a warehousing model or a schooling plus library model. So it's a very odd way in which the foreign investor VC money has come into India. So what do you think is driving that? Why? I mean, I understand the domestic reasons why Indian corporates are not contributing to, capital formation or investment rate. But why are the foreigners not doing it either?
I don't have data on all of the different investment sectors, and I think I'll only be able to speak for venture. I think venture, historically, we have relied a lot on software. Hardware, for instance, is really coming to the fore now. We have a company called Ethereal Machines. They do manufacturing as a service. It launched in 2018 and it was one of the first investments I saw when I joined Blume. And for the next 4 or 5 years, they were in wilderness. They took a long time to get the product going, but even after the product went, the demand was very weak. Finally, they pivoted and then they pivoted again. And now they are red hot, right? Peak 15, which is Sequoia now, led a large round in it recently. Interestingly, we're beginning to see a huge appetite for manufacturing now at the early stage amongst VCs. And many of these VCs also have access to foreign capital. Like if you look at our base, it's largely institutional and a lot of them are abroad, right? So but 75% of our capital base is international. So in a way, we are a proxy. Blume, that is where I work, is a proxy for international to that. And I would say one reason you're not seeing a lot of money, Shruti, is the action has just started now. And if the action starts now, in whether it's manufacturing, whether it's deep tech, whether it's space tech, etc., it's only in a few years that you will start seeing big money come into it. For instance, if you look at the venture funding scenario 2 years back, it was about 40 billion, of which 3/4 was what's called growth capital, which is capital above 15, 20 million. Okay, at a go. And that has actually collapsed now, but still is 2/3. Seed, where Blume operates, is not even $1 billion. We're less than 10% of the overall market. And growth is really 2/3. But growth lags seed. It takes every 18 months for growth to catch up, in the sense that growth says, okay, first get to early growth, then we'll come to growth. So I feel if we're going to do this in, say, 2027, then we might actually see a slightly different thing because there's some exciting plays coming out of India. But we're beginning to see that largely at the seed stage. So some of the discussion we've had on do VCs not invest in very technologically kind of advanced startups, etc., that's beginning to change. There is an appetite for innovative, interesting place in space tech, climate tech, manufacturing / deep tech, nanotech, all of that. We're beginning to see that. I mean, we've had a fair amount of new hires, and all of them have come in that group, really, the deep tech / climate tech group. And I sort of represent the old economy group, and we have intentionally not grown that too much. So that's been one of the most positive signs, the ambition of Indian founders. And so I dare say, you've got a point there, but I think we're reaching the point where in a couple of years, we're going to prove you wrong, hopefully.
Yeah. No, and this also shows the maturing not just of Indian sort of deep tech manufacturing, but also the maturing of the Indian VCs, including Blume, because you need to have a portfolio that's diversified enough, in all the other areas that now you can say, okay, a large enough chunk will be deep tech, right? So that's one. And the second, I think also going back to our previous conversation is now we have finally started seeing sort of like a relay race formula for deep tech where you can pass on to the next person and the next person, and there is some exit, maybe not as quickly as, SaaS companies end up coming to fruition, but there is some kind of exit plan even with deep tech and space tech. Space tech, of course, much more driven by government and government funding and contracts, but, even in other places. So I do see what you mean about this is now a new area, and maybe it'll start contributing to fixed capital formation in 3, 4, 5 years. Like at least that would be my hope.
Numbers will be much smaller. We are a very tiny part. We of course over-index on innovation and new technology, but really I think the big spending and the big lift will have to come from the Reliances and Adanis of the world. Yeah.
No, absolutely. And they are going in the opposite direction, right? During COVID, etc., they were actually retiring a lot of their corporate debt. They were very nervous about how costly funds are to borrow in India and sort of, how it's only going to get exacerbated with this twin balance sheet problem. It seems to me, at least on the government and the banks, public sector banks, and that a lot of this has been cleaned up. Do you see private borrowing, corporate borrowing increasing over the next few years and sort of contributing to this capital formation? Or do you think they're waiting for something to happen before they invest further?
I'm not an expert on this. I only read a lot of reports and try and put it together. But all of the reports that we looked at for Indus Valley 2024, say that we've sort of hit the bottom of the lack of borrowing, and we're going to see an uptick in borrowing. And a lot of the reports, and keep in mind that these are sell-side reports, so they have to sell a story. So I don't know if it's entirely factual based and how much of it is marketing. I mean, I think bulk of it will be fact based, but there is certainly a case being made. Infrastructure spending boom, infrastructure spending wave. And we are beginning to see the early signs of that, whether it's, for example, in manufacturing, Dixon, people who are benefited from PLI. And there is a case being made that we're going to see a fair amount of spends in India in the infrastructure area over the next few years. I don't have this first-hand information of that, given where I sit. So this is second-hand information, consuming a lot of reports. So I would agree with what you're saying that we are likely to see that. I mean, I don't think I'll be able to say that I have any information other than the secondary reports that I consume.
Yeah, my intuition is not just based on the reports. I'm sure we're reading some of the similar stuff, things that are put out by all the big banks and, all those kinds of reports and surveys. One thing that really concerns me when it comes to private investment in fixed capital formation, which of course, therefore also is related to private borrowing for the same purpose, is regime uncertainty. Right. So the more, and when I say regime uncertainty, I don't mean governments collapsing or, this is not the African dictatorship problem. This is more the problem of, even with a stable government in parliament, we have no stability when it comes to taxation. We have no stability when it comes to tariffs. And Indian manufacturing 3.0, which is basically what's happening right now, right? Indian manufacturing 1.0 was in socialist times, 2.0 was post-liberalization, and now we are trying to enter a world where we are trying to better integrate with global supply chains. So this is very much, Foxconn coming and, sort of setting up in India and thinking about India as an export market. But for that to happen, tariffs need to be sensible such that it can effectively integrate with the global supply chain, and taxation and GST needs to be sensible. And if these numbers keep changing, since GST was introduced, there have been more than 550 rate changes. So if these things keep happening, and already we have 7 non-zero GST rates. So that kind of worries me more, because before putting a lot of money down in brick and mortar, you need to be certain about those things. And India is already at a stage where we're not even utilizing existing capacity when it comes to manufacturing, because we're not that well integrated with the global supply chain. So this seems to be shifting now. There's a big push, but I am really holding my breath for GST and tariffs to get streamlined and sort of stay stable for a few years before I see a big investment push coming in from the private sector.
Interesting. One way in which startups and the world of startups are kind of playing in manufacturing is not by setting up factories, but so much as aggregating factories. And this aggregating a lot of factories, sort of like being a cloud manufacturer, really pioneered by Zetwork, to whom a lot of credit should go, in that they went to, like, if they got an order for XT widgets, they went to 6 manufacturers and said, manufacture 1/6 of XT widgets. And then we'll aggregate it together. We'll do all the basic quality check. And that sort of led to a series of vertical plays. For example, there's Groyo in textiles, which try to do this. We've met a couple of startups which want to kind of do more in specialty chemicals and specialty manufacturing. One manufactures stuff for railways of Eastern Europe and stuff like that. So I think one way in which startups are kind of dealing with the uncertainty that you said is by saying, we're not going to set everything ourselves, but we're going to kind of become this layer, sort of software plus light hardware layer, if at best we'll do some monitoring, etc. And it's an interesting model because there's also a fair amount of SMB, manufacturing base India has clustered across Pune, some parts of Delhi NCR, in the south, etc. And so they are beginning to kind of take advantage of that. With startups, I think you will not see any big, large bets. None of us have that kind of capital. The markets here, only $9 billion came into the Indian venture economy last year, or was invested in the venture. $9 billion is not much. It's not going to kind of help you set up very large number of kind of factories and stuff like that.
In fact, I think it'll be the reverse. I think startups won't lead in this business. It is when the reforms start happening in other areas and people start investing in traditional manufacturing that the startups that are already set up for this kind of utilization, for coordination, will start seeing an uptick, and then more money will flow into that. That's my expectation of how this will play out in the future.
I probably agree.
Yeah. So, I want to talk to you a little bit about the Indian consumer. Right? So if I just read the report at first glance, it looks like, wow, the Indian consumer has changed. But maybe the Indian consumer has not changed that much, because what I find is once you scratch below the surface of India 1, necessities really dominate consumption. Discretionary spending is tiny. It's growing, which is the nice, green shoot that you point out, but it's still pretty small, at about 13 to 21% is where it's grown. So one of the interesting things that you say in the report is there seems to be a limit to India's consumption class. Right? That's I think, a direct quote from the report. So one question I have is, other than economic growth, what do you see driving the change in India's sort of, the size of the consumer class? And part 2 of that question is the Indian consumer fundamentally changing, right? Even within these India 1, 2, 3 categories, is there a lot of churn? Are people's attitudes, habits, preferences fundamentally changing? Or is this just a question of whoever, which area, state, demographic you look at that point of time, and who has more ability to engage in discretionary spending?
Got it. So one factor other than economic growth, which could drive consumption is, I think, remittances. And
Yes.
there is this very famous exit voice loyalty framework.
Yeah. Hirschman. Yeah. Albert Hirschman.
Yeah. So, India, if you notice, its exit is led by two classes. One I call the exit class, which is people, for example, Punjab to Canada is a classic exit class corridor, right? People who seeing farm productivity drop, who have other challenges. Kerala, for instance.
And
Yeah,
there are no
Kerala, for
jobs. Yeah.
instance, right? A very vocal, highly educated, kind of awakened kind of labor class means that manufacturers are very scared, right? Even though the human capital stock is much higher than on average. Okay. So there isn't so much manufacturing come into India as opposed to, say, Tamil Nadu, for instance. Very similar kind of literacy levels, maybe albeit 5% lower, maybe. Yeah. So Kerala, for instance, is again the classic exit corridor, okay, which is to the Middle East. And Kerala really is a economy propelled on the back of that remittance. It's a remittance
Absolutely.
superpower. But we also have an English class which is exiting, and that's sort of it's something that might come into the next report. But I'm fascinated by why the elites kind of migrating out, and so that's fascinated me as well, because the people who are going to the US, we got. I mean, there's a recent report I was seeing, anyway, from 3 to 5 million people, the most highest paid
Yes.
XYZ.
Yeah. Indians are supposed to be the model minority, as they call them, right? The fewest in terms of high school dropouts, the fewest in terms of criminality, so on, the highest in terms of education, graduate degrees, income, within the subcategory of South Asians and Asians. So very much that group that you're talking about, which is propelled by IT exports and things like that.
Absolutely. So we got some interesting data on remittances, and found that 20% of India's remittances come from US, even though it's 4.5 million out of just 4.5 million people out there, and they account for like 20%, 20 billion of or so of remittances. So yeah, the model minority part is justified. So I would say, other than economic growth, I can only think of remittances as one driver. As far as economic growth is concerned, I think my worry is that the India one class is deepening, okay, thanks to, basically access to ownership of capital. And when you own capital, whether it is capital as in cash or real estate, we're seeing all of those assets. They own the assets, majority of the assets, and those assets are going up in value. So one is asset-led, the other is also income. If you look at the formal economy, we have a very undersized formal economy. Data these days is very hard to come by exact data. All the data points are like 3-4 years old. I wish I could have the latest data. But the last data point I saw was about 550 to 600 million workers in India, of whom about 10% work in the formal economy. About 30% of this is thanks to IT. And that is really the greatness of Mr. Narayan Murthy and his peers, right?
Yeah.
In that 30% of the middle class owes itself to that industry, that one industry. So when you look at 50 million people, and I remember reading Poor Economics, that wonderful book, and what stayed with me was they said that very few of the poor, and I think they said that the poor are poor because they don't have visibility into their income streams. And when you look at the ratio, the share of Indians who have predictable income streams, so that we can invest in our kids' education, we can buy a house, XYZ.
Absolutely.
It's just 50, 60 million people, right? Like, so about 30 million households. Again, you're coming back to that number really. So take a look at those 50, 60 million people. Unless that grows, Shruti, we're not going to see India one grow. Okay. And for that to grow, and strangely, what we've had in India is been growth without necessarily the big increase in employment. And some of this, I'm not the best person to debate, but we've seen Mr. Raghuram Rajan and Rohit Lamba talk about their views on this. And there's a big debate there. I don't want to contribute to that debate. But what we're beginning to see is really growth that doesn't drive jobs as much. We have investors in a company called Smart Staff, which is in the business of staffing textile workers. That's a big category. Tremendous offtake. Trespassers will be recruited kind of offtake, right? But the big challenge is skilling. Skilling is a fundamental challenge. The challenge they say is employers won't pay for skilling. Okay, employers won't pay for skilling, and the multiple reasons for that. Again, chicken and egg. Employers pay for skilling because workers quit immediately,
Yes.
and so on and so forth. And one of the big challenges these folks have is that come Eid, come farming season, workers just
Go back.
head home.
Yeah.
And they've actually done a lot of research. They finally got to a series of hacks through which they persuade people to come home. One of which is that tickets are given, etc. They even paid some of the workers, say, gave them money saying, why are you going home for farming? Take the money, give it to your brother or uncle or father and tell him to hire a worker. And they're saying they can't hire workers because Narega means the average wage level has gone up and social consciousness is backbreaking work, farming, right? Some of it is backbreaking work. Historically, we've had a certain set of castes and all who could be kind of whatever, right? Persuaded for kind of word to kind of do the stuff. And today they're not willing to do it. Okay. So they have to go back. And that means if you're a factory, you've got to then say, oh, this is Eid season, this is farming season, right? We are going to see a 20% drop in workers. So it becomes very hard to kind of plan in India. So it's very interesting why textiles. Textiles is interestingly the fastest, like any other job requires at least like 1 year, like auto, etc., electronics, CNC. CNC needs a degree, technical degree, right, to operate the CNC machines. But textile, you can do a sewing machine in 3 months, you can learn. So really, I think the fundamental challenge for India is if you're not going to invest in people and people are doing the kind of behavior which companies won't invest in them, then you're fundamentally stuck at two ends. You're going to have a very elite class which works with machines and tells machines what to do. Okay, that's people like us. And then you have this large semi-skilled, unskilled class, right, which just can't seem to kind of break into. So these are, I think, the things that sometimes worry me about India, but it's also fascinating, right?
Yeah. The way I see it is, I feel like the Indian economy, because of its scale, a lot of the bottlenecks get hidden, right? Because there's always like an untapped place where you can get a little bit more utilization. And I think now, after 30 years after liberalization, with the services sector being about as utilized as we can with, IT export-led growth, which has led to urbanization, which has led to all the services, ancillary services that the very rich use and so on. Now, I think we have come close to that limit. And we really tested that during COVID when everyone went back, when that sector just shut down and these people couldn't go out and spend. That service sector said, oh, we really need to rely on the networks back home and the agrarian networks and all. So I think we've tested it. And now we have reached a point where it's not that India could have gotten away without manufacturing growth ever in its, trajectory. But we managed to get away with it for about as long as we could because of the scale of the service sector and the scale, even though service is a small part of the economy, it just generates such a big number compared to another country. So I think now we really need to get to that state level, local level structural reform. Like that is the bottleneck. If people can't sell their land back home, you're always going to have a situation where, the brother or the cousin or the unmarried daughter has to come back home to the village to help during harvest season or sowing season or whatever. And I think now we are there. So until we have that next big stage of structural reforms, I'm afraid that even a startup, which is technically in the matching business, which has nothing to do with the agrarian economy or something else, is going to feel the ripple effects of that bottleneck. That's sort of where I think the next thing is. And unfortunately, none of this can be done by the union government. This can be done at a state level. So I think, as you rightly pointed out, Tamil Nadu has been the front runner in this. It has a serious industrial activity and also industrial worker class, which has then spurred the rest of the economy further. And I think the question for the rest of the states is, how do they get there? How do they get to a point where your services led, but you also have the next class of, 30-40%, which can exit agriculture and go somewhere. And even in Tamil Nadu, now I realize the services, you go to a Adyar Anand Bhavan or you go to a, Sangeeta or Sarvana Bhavan. I'm told that the back-end staff is all from Bihar and Odisha. right? And they spend 3 years in Tamil Nadu, they can also become front-end staff because they also start speaking Tamil. Because you can't be selling idlis and taking down the chutney order if you don't speak Tamil. No Tamilian would order from them, right? So this is now happening that, now Tamil Nadu has become such a sophisticated sort of state in terms of job creation that the migrant pool has to come in even for services, which was earlier not the case, right? The migrant pool only came for construction or, this kind of backbreaking work that no one else was willing to do. So I see what you mean. Like, this is not a problem startups can solve or scale. This just, I think we are getting to the bottom of the bottleneck, where it is in the Indian economy.
Couldn't agree more. I see this in Kerala too, what you said about, frontline staff from the Northeast specifically.
Yes.
There's one very interesting pattern I heard from Smart Staff again, that what drives migration within India and why Kerala and Tamil Nadu get a lot of people from Orissa to the Northeast is the rice and predominant animal protein. Like, for example, they like to eat meat or fish.
Yes, absolutely.
Right? Whereas in the north, it's dairy is the predominant protein and wheat is the predominant carbohydrate. So it's fascinating how, and if you and I think the one thing we didn't put this time is sort of call it the milk line. Okay, so out of the north and the west, where you don't have lactose intolerance, and the south and the east, historically there's predominant lactose. That is really the map of India, which explains India.
Yeah.
Like north and the west is where the BJP, for instance, rules. There's so much can be explained by that one map, really.
Yeah.
I call it the milk line.
Yeah. Yeah, the milk line and the rice line, right? Like where and it also, Alice Evans was talking about how pastoral versus rice growing economies, there's more female labor force participation, in plantation economies and rice growing economies. So actually, if you see a lot of the women who are leaving Odisha and the Northeast, it's the single women. And now their families let them travel, especially from places like Odisha, because they think, okay, they're not going to come back and work in the agrarian household, but at least if they work for 3-4 years, they can pay for their own wedding and their own dowry. That is what we're seeing. And a lot of the electronics companies are fascinating because, they have that hostel dormitory model, right? Like, there's that special corridor, the Sriperumbudur corridor, where a lot of this industrial activity takes place. And when you have that kind of a system with young people, it's easier to have a single gender versus co-ed. So for very heavy manufacturing, you will rely on men. This would be something like Asian Paints or, auto parts or something like that. But for instance, electronics, right, where the shift is 12 hours, I have been told, I have no evidence for this is purely anecdotal, that women actually do better in a 12-hour shift than men do. Women do better in a 7-day week or a 6-day week than men do, because the expectation is that they have only 3 or 4 years to work. And then you can build out a women's dormitory, you can have, therefore you can have much more stable workforce. You can have a doctor on call. You can have all of those additional benefits, which become very complicated in a co-ed system, plus the problem of, complaints from family if people fall in love and get married outside their caste and so on. So it's becoming you're absolutely right. It's becoming very interesting how the migration pattern's going, especially when it comes to, female labor. That, female labor was never a migration category. Women migrated purely for marriage. And then, post-liberalization, a little bit for education, but still predominantly marriage. And now that seems to be changing, which again gives me a lot of hope.
It's interesting. I didn't know about the female migration route. Like, that's interesting.
I think it'll grow. I think with, Foxconn and Qualcomm, with all these guys coming in and having the new shifts, right? This is the South Korean and Chinese model, which was already had so much female labor force participation at the factory floor level that I think we will, I would expect to see more of this if the government's push to integrate to global supply chains, to integrate to China +1 becomes, a bigger deal. One of the questions I wanted to ask you, just to move away from the, the service and consumer category, was about investments and savings, right? So India has a low investment rate, but it's not clear to me that the savings rate has changed dramatically at the individual or the household level. What we find actually is that it's very mutual funds driven. right? So it's this SIP model, which is a different kind of sachetization model, this time for saving and investment, as opposed to, so instead of directly buying stocks, we have the SIP model for mutual funds. And the big change that you point out has been that not only do mutual funds dominate, it's really the domestic institutional investors and not the foreign institutional investors who are driving this crazy market growth and market capitalization that's taking place in India. So, two questions related to this. One, why does the Indian household prefer to save in this format? Right? As opposed to maybe investing in their own ventures, maybe small entrepreneurship, maybe other ways of investing, right? Maybe in property and so on. Why is it this SIP mutual funds led model? And second, what that means for startups again, right? For the newer firms in the newer categories that we're discovering.
So, two reasons for this. One is that a lot of the folks who are investing in mutual funds are India 1 service class employees. Keep in mind that all of these numbers neatly match, right? So 50, 60 million formal employees, which means at two people, it's 30 million households. Yes, of course, there are business households as well, and sort of nothing will neatly match in that sense. But broadly, there is a coherence between the numbers. So service class is the predominant investor in mutual funds. And what has happened, Shruti, is over the last few years, a series of supply side and demand side factors have led to the growth of the mutual fund industry. So one is KYC. So it used to be very arduous to do KYC checks, etc. Almost physical KYC checks had to be done. We had to go to the bank and submit a lot of documents. And now, thanks to DigiLocker, it's an API call away.
Yeah.
So that makes KYC easy, onboarding easier. So startups, for instance, like Zerodha.
Exactly.
I mean, it's not venture funded. A lot of VCs probably wish they could have funded it, but it's a very well-run, profitable company. But Grow, for instance, or Upstocks, these are venture-funded companies. Grow, if anything, is bigger than Zerodha in volume, the number of people, and they've grown like a rocket of late. So they have taken advantage of it. And it's also a very well-marketed category. Like if you go to a bank, each relationship manager, as they're called, it's not a private banker, but it's sort of like a democratized version of that. They will try and push mutual funds because of the commissions and because of the incentives that they have. So it's a very well-marketed category. And I think these two, but really fundamentally, Shruti, it is the deepening of India 1 and basically the economic surplus that this constituency commands today. And it's driving something like $2.5 billion every month to the stock market. And the stock market typically gets about 5 billion. The rest comes from institutional investors, etc. So this 5 billion that's systematically going in to a stock market, which is not as deep, right, as the US one, etc. For instance, we have about 4,500 stocks. It's very similar to the US, I think, in that. But when we did the calculation, we found that 3/4 of these 4,500 stocks had market capitalization less than 250 million. Only 10% had something above $1 billion in market cap. This other thing, Shruti, is the float is very small in India, right?
Yeah,
so many companies have small floats. They're promoter controlled. Okay. So because of the small float, what it means is that there has been a kind of a runaway growth in stock prices. More money comes in. There's limited kind of stuff to buy and they're limited high quality assets, right? So you buy them and because the float is so small, the prices go up.
Yeah.
So it's like a self-fulfilling prophecy.
Exactly.
And that is one of the fundamental reasons why we've had this tremendous increase. And if you've looked at it, the Indian stock market, just be a joke that sometimes, historically people say that, venture funds give any kind of valuations, etc., which is not entirely true. There's a reason and the logic. But around 2021, 2022 is when we would actually tell whoever asked us that, look, you call us fanciful, but what about the public market?
Oh my God, yeah.
The public market's in a league of its own. So I think these are some of the factors that has driven and has encouraged more and more money to come in. And it's growing. Yeah.
So there are two things I see coming out of the stock market question. So one is just, how do we think about the trajectory or sort of the duration that startup stake from, say, seed to IPO, right? Is this an opportunity to make that trajectory shorter? Is IPO and India's stock market and its investor, which is almost entirely in mutual funds, chasing after very few high quality assets, is this now a group that we can go for, even as a startup on its growth trajectory? Is this a valuable exit option, for people who invest?
I do think that in India, we will need startups to go IPO much earlier than their counterparts in the US. Primarily because there's an upper cap on how big the consumption market in India is. So keep in mind that the US is a $23 trillion economy, very homogeneous. What works in Illinois will work in California. It's not true in India. In India, like there are 85 regions in 28 states, and these socio-cultural regions, many consumption patterns break. So India is one of those places where there is scale break all the time. Okay. And given that, I think there are clear upper limits on how much certain companies can grow to. I do think there are upper limits on how fast companies can get big. I think that's the thing. It's not that companies can't grow. They can compound in India over a long period of time, whether it's Unilever, whether it's Asian Paints, whether it's Castrol. There are so many wonderful examples of companies which have kind of grown. But they've IPO'd early. HDFC Bank is a compelling example.
Oh, yeah.
1 year or less than a year after they kind of got the banking license, they went public. And for the last 30 odd years, they've been giving stellar returns, really. It's only now that they've faltered a bit. So historically in India, we've had companies going in IPO early and have compounded over a long period of time. In venture, you tend to invest in companies which you think are going to hyperscale.
Yes.
And there is so much capital that is available in the West. And I genuinely feel that the Indian venture market has been shaped as much by the Western capital deployment folks as much as by Indian founders. Because in the West, they have gargantuan amounts of capital and they have to kind of invest that somewhere, right? So I call it the highest of the first world problems where they have deployment targets.
Yeah.
And they're going to deploy it somewhere. And they look at India and say, wow, I think this could do it. But what I think, I'm sure they've realized now, but what we need to keep in mind is the kind of hyperscaling companies, and I like to divide startups into two categories, hyperscalers and compounders. Hyperscalers are companies, for example, Zepto is a good enough example of that. Zomato is a decent example of that. These are companies where they broadly have India 1, India 2, and maybe India upper ends of India 3. Some of them, not all of them, or at least have India 1 and India 2.1. clearly locked in, and they have a much larger market to go after. And so they can continue to grow for a long period of time, so they can absorb a lot of capital. But a lot of the other Indian companies can't absorb so much capital, right? I call them compounders. And for compounders, I think they have to be very careful on how much capital they take in, and they should list early. Yeah. And in India, I think the bar for, even in the US, suddenly the debate on Twitter over the last few weeks is about this debate over how big should a company be before it goes IPO. And there is sort of this realization that, hey, you don't need to be $500 million revenue to go IPO. You could probably do it at 100 to 150 million too. And of course, Sarbanes-Oxley and some of those factors.
It's more regulatory driven, right? Because the US is so flush with capital that if the regulatory problems are even a slight friction, you say, okay, let's delay the IPO so that we can kind of do this privately a little bit longer. We can innovate without eyes and without quarterly reporting requirements a little bit longer. India doesn't have that similar constraint. Here, the constraint is the capital availability, which kind of, it ebbs and flows with US interest rates, right? So when the interest rates are low, then there's huge influx of capital. When the interest rates are high in the US, like right now, suddenly everything disappears and it's called a startup winter, whatever, AI winter, crypto winter, pick your favorite winter. So here, I understand what you're saying, that it just makes much more sense, especially for the firms that are not going to have that kind of hyper growth. Not everything is a unicorn, nor should it be. And it also seems a little bit more democratic in a sense that, we need more stakeholders in India's sort of, startup growth culture, right? And one kind of stakeholder comes from jobs, which that's not where the startups are leading so far. And the other kind comes from capital. And I think once the capital influx comes in, then they'll just have a very long trajectory. They will be more founder driven because they're compounders, right? They're not so much venture and PE driven and so on. So I don't know. I somehow think of it as a positive thing. Do you think this is a positive thing, or like this is terrible that India is at this stage?
No, I think it's a very positive thing. You alluded to capital availability, and I think in India, one important factor is of capital absorbability.
Yes,
So,
absolutely.
yeah. So
because
we
of the
don't
size of
have
the market, basically.
size of the market, absolutely size of the market issue. As the market expands, and there will be more hyperscalers, and they will be able to unlock new revenue streams, and certainly kind of be able to absorb more capital. At this point, we are beginning to encourage our founders to go and list early and continue and grow. Like, for example, one of our companies, E2E, we do sometimes wonder if we kind of got them to list too early, because they've really grown, and they listed on the SME exchange, which is sort of the exchange for the smaller
Small and
companies.
medium, yeah.
And they've upgraded now to the main bourse, and they're benefiting from the AI wave. So, and
What do they
they've
do?
very-
Sorry, I'm
so
not familiar with them.
yeah. So they make GPUs available.
Oh, nice.
Yeah. It's not like they manufacture it, but they kind of help make it available for companies, and they're kind of riding that wave. I don't have too much information, so I'm probably, it's not a company we track very well because it exited. But yeah, if you kind of look at the compounder category, and I think the one learning we've had is that the SME exchange was very active last year. They accounted for 10% of the value of the main bourse. The main bourse saw something like 6 billion, and about 600 million was what the SME exchange accounted for in terms of listing, how much they were able to kind of get. So about 10% of that. It's the highest it's ever been. Can it last? Hope so, because it democratizes ownership and allows companies to list early and kind of grow, and allows us to get an exit as well.
Yeah, it's the pipeline issue, right, that we talked about last time, which is this major problem in India where you need a clean pipeline where at each stage people can exit, and IPO being one possible way is quite fantastic. The second part of this whole, domestic investor and mutual funds, a part of that is I see that FDI is low and declining in India, right? Again, the same problem we have with gross fixed capital formation, we see a similar trend in FDI. And until recently, when it started picking up, it was declining. And FIIs are also low, relatively speaking, right? Your domestic institutional investor is dominating. Is India becoming less attractive to foreign investors? Is that how you read these data points? Or do you read these data points as, the Indian domestic investor is actually coming into her own and driving the prices up, which make it less attractive for foreign investors, especially when, interest rates are high in the developed part of the world and so on? Like, how do you read this trend?
Yeah, here's where I think my lack of economist toolbox handicaps me. I need a lot more understanding of the wider kind of economy. I think on foreign institutional investment, I think the last few years have been a little more complex. COVID, then the rate drops, then the rate increases.
Sharp increases, yeah.
Sharp increases, drops in the rate increases since 20. So it's hard for me to kind of really understand, because really the Fed governor is a patron saint of the Indian capital market, really, right? It's really hard for me to kind of parse on the FII front. So there, I would say that the FII's behavior has been kind of hard for me to kind of detect. So I think there I would probably say the domestic market's really been a larger factor, really, kind of one. On foreign private investment, I'm genuinely puzzled, right? I would have expected that to take off, especially with China plus one.
Yeah.
And a lot of those factors. I'm hopeful that we'll see some of it changing in the coming few years. And again, because it's so politically treacherous space to kind of wade into, I would say that I do feel that we are likely to see an offtake growth in FPI in the coming years, especially investments in manufacturing. It will come, but it has not come in at the pace that I think we all expected it to come. You alluded to some of the reasons. I think these are both questions, FPI as well, FDI as well as FII behavior. as to why they have been so. Well, one I can explain to an extent by some of the larger macroeconomic factors. The other has been like a little more harder for me to kind of understand. But what we've really seen is the China plus one. We haven't seen it's not, India is not the overwhelming this thing. Vietnam seems to be the big.
Vietnam, Bangladesh, they seem to be getting that share.
Yeah. And Vietnam is largely Chinese manufacturers who've just set up there, and they've kind of just taking advantage of the China plus one, or taking advantage, doing the best of what they can with the China plus one rhetoric.
Yeah, and they're just better integrated, right? So the way I read that trend, the Vietnam trend, as the China plus one policy is, they are part of all the regional trade agreements, and they have all the same, at least they've adapted their institutional rules, even something simple like labor law. Do you mandate an 8-hour shift? Do you mandate a 12-hour shift? Or do you not mandate at all, right? These things, Vietnam seems to be much better poised to integrate to whatever the Chinese and South Korean manufacturing setup was, such that now the same supervisors can come and monitor, the same shift, the same size, the same format. So it's sort of like, even the industrial activity in China was so templatized and at such a high scale, right? That's really what China gave the world. China and South Korea just templatized manufacturing. And so anyone who can integrate into that template relatively easily because of domestic policy, tariffs, VAT, everything is just going to be the beneficiary of that. So, I think the ball is really in India's court on whether we wish to reform and reform in a way that we can integrate with that, or are we going to, march to our own beat, which is what we've been doing for 30 years.
Yeah. So the East Asian model, which we kind of saw in the Four Tigers, right? That's really, I think, what you're seeing in Vietnam to an extent. It's a laggard there in the sense that they're trying to catch up. But if anything, I think it's far more on the East Asian model. I think India, I see it as called a weak East Asian growth model, a vegan model as we call it. It has some characteristics of East Asia, but not entirely. And
nowhere close.
Yeah, nowhere close. Even the 12, I remember reading about the 12-hour shift thing being kind of reversed in India. Was it Tamil Nadu or Karnataka? One of the states.
I think Karnataka, first it was brought in, then it was reversed. Then I think the government gave the special exception or something like that.
Yeah.
There was some back and forth going on. I think it's Karnataka, if I'm not wrong.
Got it.
But yeah, those are the sorts of things. Like, I think we are now realizing how well we integrated into services and exports when it came to IT. We really integrated well into the global supply chain. And I think with manufacturing, there are just more hiccups and we're struggling. And, that reforms agenda, electricity. Oh my God, our electricity situation is, it's just bananas. Sorry, I don't even have like a coherent way of describing it like an economist. Our pricing is crazy. Our shortages are crazy. Our cross-subsidization is crazy. How we regulate captive power plants, open access power plants, crazy. So yeah. One other last topic I wanted to touch when it came to the consumer consumption savings, that kind of triangulation you guys have come up with is India's fintechs are booming. And actually one trend that you point out, which is super interesting, is even startups and companies that were traditionally not fintechs have entered the fintech zone in that they are now becoming de facto lenders. They're all applying for licensing. They're trying to figure out buy now, pay later models and, so on and so forth. Having said that, the personal loans, it's a small category, but it's been increasing that you point out. So it's increased 12x in volume, but only 3.5x in value. But the bigger problem is that about quarter of them are now, I believe, non-performing assets, right? So when I look at this data that you've pointed out, there are two ways of thinking about it for me. One is these are the people who used to go to friends and family and money lenders and so on. And now thanks to the DPI infrastructure that we have, this digital payments infrastructure, they've been plugged into the economy of formal credit. They may not know how to deal with it. Some of it might be an information/attitude issue. Some of it might just be credit crunch, right? Earlier, money lenders were charging crazy daily compounding and things like that for these kinds of, small sums of money that were lent. The banks obviously don't gouge like that, but that means the NPAs start mounting. So two parts here to this question. One is, do you see the fintech retail market turning into NBFCs and, sort of plugging in a particular kind of retail lending loan as a positive sign. That's part one. And part two, are you worried that this NPA risk is going to turn into some kind of systemic risk that also starts infecting non-fintech companies? Because the RBI is very worried about this sector, as far as I know. So how do you see this space playing out?
Yeah. So lots of questions there, but I think the broader theme...
Sorry about that. It's just the report is so rich and you guys have, I must congratulate you and your co-authors. You guys triangulate in such an organized fashion, right? It's never one data point. It's like 10 pages of data that kind of help us get close to the truth in one sector and before you move on to the next. So that's the reason for the long setup and the long questions. But sorry for interrupting you.
Yeah, no, thank you for that. When we look at the data, what data tells you first is that we are fundamentally underpenetrated on credit. And a lot of what has been happening, like you rightly said, the digital public infrastructure removes the friction of onboarding the customer, etc. And it makes it easier to lend for sure. But there's also appetite from the consumer. And I think the challenge is that the growth now is largely coming from India 2 and maybe even the bottom half of India 2. And we're beginning to see some of the numbers like about a quarter or just over a quarter of loans under 50,000 are NPAs now.
That is defaulted for more than 90 days.
Yeah, which is 90-day plus. Then about 40% of personal loans are going to borrowers with 5+ loans. And typically, these are signs that sort of what happened in the US in 2005 to 7 in the housing market. These are kind of warning signs.
Yeah.
And I think the RBI clearly is worried. And for instance, data point that came in one of the RBI interviews that personal loans are 30% of bank advances.
Yeah.
Not corporate loans. The fastest growing is personal loans. And also now something we couldn't put in the report, but heard from someone that the RBI is very worried about some of this going into the F&O, futures and options market, which, if you know, India has the highest F&O volume and short-term volume. And where is this money going? Is it going for productive assets or is it going for unproductive assets? Personal loans, I don't know if it's all productive entirely. So I think the RBI, if anything, it's the one institution, I would say, I mean, again, getting into controversial territory, one of the few institutions which has held its own and stands up to anyone. I do feel the RBI is coming at it in a very positive way. From they really care that no Indian kind of depositor should lose their money. And I think that's what drives them. And I think there is certainly worrying warning signs. For instance, we have invested in a company called DPD Zero, so the whole investment was born out of seeing, I normally don't invest in fintech, but when I saw all of this lending taking off, and I said, like, what is the second order effect of this? So collections is going to be a nightmare, right? Because
Absolutely.
you're going to, so this is a company which focuses on better collections, and they help lenders collect more, and it's actually doing very well. And I get a lot of interesting information from them. So they're fundamentally saying that a lot of the advances have gone to customers with low CIBIL scores or credit scores. And they see strong patterns. The lower the CIBIL score, like for example, and many people are rotating money between 4 or 5 things, etc. So Shruti, I do think overall the credit we're underserved on credit. For instance, the entire credit market's about 2.25 trillion, of which banks is 90% of this, right? There is a lot of room to grow, but I do feel that the growth is largely come for personal loans as at one category. And the real driver, you talked about 12x kind of increase in volume of personal loans. So it grew from, I would say, about 8 million to about 100 million. So that's a 12x increase over 5 years, 2018 to 23. But the real driver has been small ticket personal loans, which grew 31x. It's about 3 million. They're about 88 million. They're 90% now of personal loans. So that's been the driver. And most of it is by NBFCs who are these non-banks, but for the listeners who are abroad, non-banking financial corporations. And a lot of them, these NBFCs, are powered by fintechs. Fintechs are these new age startups which we have funded, like we as in the venture economy has funded. And one trend we are certainly seeing is the fintechs today are saying we want to be more regulated. We are happy to become NBFCs. So they are picking up NBFC licenses. Many of them want to be banks. So one of our fintechs has actually got a banking license called Slice.
Fantastic.
To get that license.
Which is very hard to get. So I'm very impressed they got it.
Yeah. So the journey is sort of to get more regulated, and we're beginning to see. So I do see that these are the two broad things. One, there is more credit, but credit is not necessarily going into the most productive side. Will it change? Hopefully. And we're seeing a clear sign that the RBI's regulation is beginning to kind of impact certain areas like BNPL, for instance. India is stillborn because RBI came and said you can't do some of these things, and it just stopped. For instance, the RBI's regulation, they said, what we are really seeing is fintechs are kind of driving the kind of products which they officially don't have a license for, like credit cards. So they kind of created a quasi credit card product, and the RBI came and said, hey, you can't do all of this. So RBI is well-meaning to that extent. I kind of understand. Yeah, fintechs will adapt and they'll move on.
Yeah, and in India, there's this interesting, trade-off, right? You want a lot of financial inclusion, but that means if you over-include, then creditworthiness goes down. And the over-included low creditworthiness is also the group that needs the lending, that needs to borrow the most, which means now what you're worried about is the trade-off between over-inclusion and systemic risk, right? Because you don't want them to topple the entire, have the kind of domino effect on all the other firms. And I think startups are right at the heart of it. Going back to the head of our conversation, this is the India 2 and the bottom half of the India 2 that startups want to expand to, right? And this is also venture-driven because venture wants to see certain kinds of numbers, and the lack of creditworthiness and the over-inclusion comes much later. Right? Which is a little bit different than the other companies. The other startups are cash on delivery models or something. They're not exactly fintechs or, buy now, pay later. So I think everyone will have to learn. I think it's the startups, it's the venture firms who are really pushing for growth, but maybe unstable. It's the RBI trying to cap it from the other end, trying to worry about systemic risk. So I think water will find its own level is how I read the situation. But it's these three effects which are pushing and pulling.
I agree. I think there's a realization, we kind of alluded to it in one of the charts, that the number of borrowers kind of grew by 60% over the last 5 years. So it was 250 million is the borrower base. And if you actually look at the size of India 1, India 2, sort of add them together, that's 100 million households. And at 2.5 at most, let's say, that's 250 million adults. So we are almost at any more, you're getting into really the bottom of the barrel. Certainly, I think the journey now is to kind of go a little bit beyond small ticket personal loans and try and get into a little more, can we do more productive kind of borrowings? So yeah I probably agree with what you say there.
Exciting space. The last question I have is really about the space tech. Relative to last year's report, this is one place that's just taken off in India. And it's taken off for two different reasons. One, of course, the government liberalized the space sector. Second, the government had a lot of wins. The government's able to do this, ISRO sort of, for very little money that goes a very long way, no pun intended, right? To the moon, to Mars and so on. That was led on the government front. And on the, venture front, there is a realization that India has excellent talent when it comes to deep tech, not just when it comes to IT kind of tech. And we have people who can genuinely build this out. How do you see this going forward? Do you think of the space tech market very much as there's a cap to it, right? There's a government cap to it because past a point, how do you commercialize this depends very much on military and government aided projects, which will, of course, determine how the venture capital comes in and how it exits. Or do you see like a second order effect of right now we are sort of putting together drones, but very soon in India, we will start making, the kind of carbon fiber you need as the parts to make the drones, not Right now we import that, but as we go forward, if that part of the economy grows enough, maybe it'll make sense in aerospace and the drone industry, the space industry, to start having the ancillary supply side industry, and India could eventually be a powerhouse even in that. Right? I mean, that's of course 20 years down the line. So how do you see this space moving forward?
You mentioned about defense, and I must say that defense is only one part of the demand. A lot of the funded companies, the larger ones, are not necessarily catering to defense.
Yes.
Defense, if anything, defense tech is seen as a little bit of a subsegment. And we've got a colleague who looks at that space. It's a little tricky because of payment and the way orders are given.
How do you exit, basically? That's the big question.
One big customer, and if that customer sneezes, then you got like fever and pneumonia.
Yeah.
So if you look at space tech companies, for instance, take Pixel. It's a company we've invested in.
Congratulations, they've done very well.
They've done well. Yeah, they've done well. And that's two kids, no longer kids now, Aves and Kshitij, out of engineering college. They started in their engineering college, BITS Pilani. So, Shruti, their customers could be agriculture companies, like the large big ag, for instance, because they want to kind of see patterns of like cropping and stuff like that. What space companies have done is to kind of figure out who the buyers are, and typically many of the buyers are Indian or international companies, and fundamentally they're trying to sell data. That's one model. Some of them are basically helping other space companies in payload, getting it into space. But fundamentally, the end customer who's driving this is someone who can buy data, or someone who's paying for kind of an intermediary step, the logistics of getting something into space. And sometimes there are component manufacturers and stuff like that. Yeah. But really, I think defense is a much, much smaller share than I would think. And the innovation level here is, I would say, of a much higher order. Pixel, for instance, I think their innovation is around optics. Get that camera, it has to be of a certain size, make sure it works, and all of that. This is one sector where we've seen some impressive plays out there. And I would really say this is one of the, if you're looking at the entire deep tech category, this is, I think, the crown jewel. And for a large reason, they benefited from a very well-meaning, now, I don't know what ISRO is. Is it a regulator? It is a big actor, right?
Yeah.
And they have been remarkable.
It's potentially also the biggest buyer, right? So buyer. I think that's the interesting space we're in. That's why I said this is so government-driven and led so far, right? Pixel, of course, is very interesting. There are other companies, on construction sites, there are these unmanned drones. There's a question of, can they do surveillance when it comes to, are they, worried about fire hazard, cropping? There's so many sort of potential commercialization avenues like that, which is very exciting.
Yeah, indeed. Yeah, so ISRO's kind of support, and I would say its stewardship of the sector has been a huge reason why we have kind of seen this kind of take off.
Yeah. And also, the brain drain is much more on the software side, less so on the hard engineering. Civil engineers, mechanical engineers tend to stay back. So this will, I think, very much be a homegrown industry in that sense. And I think the incubators at BITS and IIT are also quite good in terms of driving this stuff. Right? IIT Madras is one of the best incubators for deep tech and space tech, and Agnikul and all the things that have, sort of come out of that. So exciting space, no pun intended again. I think, I somehow feel like India is nowhere close to having its own Boeing and Airbus.
Yeah.
But I see Indian engineers as potentially, maybe in a matter of 15 years, becoming excellent suppliers to Boeing and Airbus and the rest of the space and defense industry abroad. In India, I know there's one big buyer and there are hiccups and there's always a question. But that's how I see so the potential is kind of incredible here. So if we don't make any missteps and we don't overregulate it, if we do it like IT, I feel like this has some fantastic possibilities. Plus, it's by nature a sector that will add to capital formation and, employ lots of people and so on. So it's a very different kind of innovation, deep tech.
Yeah, I should think so, Shruti. I do agree with you. Yeah.
Before I let you go, you have some of the most interesting reading habits of anyone I know. So I want to pick your brain on what you're reading right now. I mean, I follow your blog, so I know you write notes about the books that you're reading and so on. But if you can give some recommendations, both in terms of the evergreens, what should people read, and also a couple of books that you're reading right now which you find exciting.
Yeah. So one book that I recently finished, it's nothing to do with startups, was this very interesting book called, though somewhat disappointing because I went with certain expectations, was a book called Beyond Market Value by a female VC. In fact, she was a pioneer VC, I would say, set up her own health tech firm called Med Venture Associates. Her name is Annette Campbell White. It's actually an intriguing book. It's about her memoirs, but also deals with book collecting because she was a big book collector. So what disappointed me was that there wasn't as much of the venture capital side as much as it was the book collecting side. But it was a fascinating one. She seems to be an interesting character. I'd like to have a chat with her one day. So that was a book that I just finished, in fact, today morning. And it's kind of interesting, which describes her collecting habits. It's an addiction almost of buying books. And she was buying modernist books like James Joyce, Ulysses and the likes. So that's very interesting. I wish there would have been a little bit more on the venture side because I'm sort of a venture nerd myself and I like to kind of know about these models. Before that, I read a book called Write Useful Books. That was the name of the book. So that's by a guy called Rob Fitzpatrick, and that's about how to write nonfiction. I have somewhere here. Yeah, how to write high-quality nonfiction. It's kind of interesting. He says divides nonfiction into two categories: the pleasure givers and the problem solvers. And the pleasure givers are like a Malcolm Gladwell book, for instance. Yeah. That's a canonical pleasure giver, a nonfiction. And he says all of the nonfiction advice is for pleasure givers, but you got to write problem solvers. Which is really books like The Lean Startup, for instance, like, which kind of solves. So those were the last two books I read. There was one I read on, for the life of me, like I can't seem to kind of recall its name, but the author's name was Robert X. Cringely. Maybe once I give you the title, you can put it up there. And that's about the 80s and the 90s and the early history of tech as in information technology, right? Very interesting pictures of Bill Gates, portraits of Bill Gates and early days, really. And that was nice. A fascinating one. Accidental Empires. That's the name.
Accidental Empires.
So these were the books. So one theme is venture history and venture in tech history. The other theme is really, I think, India in history. So the next books on that theme are Lilliput Land by Rama Bijapurkar. I don't know if you've had her as a guest, but that's an interesting book.
No. This is sitting on my table as we speak, so I'm yet to read it.
Yes, same here. It's sitting on my table too. That's the next book. And after that, I'd probably get down to Karthik Muralidharan on that series. These are the books. So I've had to kind of restrict my reading to these. The other one I kind of read was a very interesting book called Double Entry, though I didn't complete it because it's about bookkeeping, the history of bookkeeping.
This is the Medicis and stuff, right? This is, I think I've read this book or I've read some book on the history of double bookkeeping and the Medicis, which was fascinating.
Yeah, it was fascinating. I enjoyed it. For some reason, the book is almost schizophrenic in the sense that at a certain stage, it kind of goes completely away from what it was and goes into a critique of capitalism, and I found that very odd. All right, until then, it's terrifically interesting. It's about the rise of Venice. It's about all of these interesting characters, and like this friendship with Luca Pacioli's friendship with Da Vinci, and it's utterly interesting and fascinating, and sort of really enjoyed that book until the part where she goes like, sorry to say this, but a bit woke, So
I think it's because it's written by a historian. For me, that was sort of, expected that historians will be fantastic in their description and then land properly on the incorrect model of the world.
India is Broken by Ashoka Modi was another read.
Yes.
I found it interesting. I appreciated the fact that he scores both the all the regimes equally well.
Yes.
And
yes.
he is balanced in that. And to read it is to really grit your teeth and sort of like get all enraged, because there are so many points at which India could have taken those steps. But only in 91, and got that wonderful 1991 project. And, it's only in 1991 that we did anything that was sane. And so that was another book that I read. I can't say enjoyed it because, a lot of it is about the mistakes that we did, but I really found it interesting and learned a lot from it.
Yeah, I got a lot out of it too.
So that's what I've been reading. And
huge congratulations to you and Anurag Pagaria and Nachamai Savitri for putting out this year's report. It's really fantastically done. And hopefully in future years, I hope that both the venture and the startup community, my sincere hope is they realize that it can't be a separate bubble. It is so deeply integrated to the rest of the economy that I think this elite group has to start really pitching for reforms. I think that push needs, it's such an influential and elite group that I think people will listen. Whereas so far it's all about, growth story and things are so exciting and, not really focused on the bottlenecks. So that's kind of, where I hope next few years go, in terms of the literature that comes out of the venture world.
Shruti. I couldn't agree more. Thank you for having me, and this was a pleasure.
Always a pleasure. Ideas of India is produced by the Mercatus Center at George Mason University. If you enjoy this podcast, please subscribe on Apple Podcasts, Spotify, or your favorite podcast app. Help us grow by giving us a rating and leaving a review. Follow us on Twitter at @SRajagopalan and at Ideas of India. Also check out our initiative commemorating 30 years of India's market reforms at the 1991project.com.